Hello, everyone. Thank you for joining. I'm going to give a couple more minutes so a little bit more people can join, and then we can begin. Welcome to everyone. Once again, I'm just going to give a couple more minutes, and then we can begin with the masterclass. I'm just going to allow a little more people to join. Okay, welcome to everyone that has joined. We will begin in exactly 2 minutes, so please be a little bit patient, and thank you for waiting. Okay, thank you everybody that has joined. Just as a quick reminder, this webinar is going to be recorded. If you require the recording later on, you can let us know. We will be sharing the recording with you as well. As you may already know, this webinar is a masterclass type about ValuPlan Plus. Quick background on ValuPlan and ValuPlan Plus. ValuPlan is just a new name that we have given to the business plan section of our valuation tool, Valutico. And ValuPlan Plus is just the modeling tool that has been aggregated to this section. Today, we're going to be covering basically the whole ValuPlan Plus workarounds and how to actually use ValuPlan Plus, the difference between the models that we have and that we offer, and a little bit of the value added and the possibilities that has been opened with ValuPlan Plus. At the end, you will have the ability to send me over questions with the Q&A button. I will try to respond as much questions as possible, but again, you can reach out to us later or after the session or the webinar if you have any additional questions. Without any more further ado, I will be sharing my screen now, and I will start with the webinar right away. Okay, I'm going to start with the plan selection. This is where the implementation of ValuPlan Plus can be actually seen. Here you can actually see the 5 different plans that Valutico now has to offer for you to do your valuations on your model. First of all, P&L and basic plan are kind of our legacy version. P&L, as the name suggests, is just a profit and loss statement. It's something pretty straightforward where you're just going to find an income statement so you can actually do a very quick valuation based on multiples, nothing very complex. Let's call it this is going to be a quick and dirty valuation. And of course, you can later on keep increasing the complexity of your model, given that you can have multiple scenarios with different plans within ValuPlan. Basic plan is actually our legacy version. Basic plan will show you the income statement that we just saw and a simplified version of the cash flow statement and balance sheet. As you can see on screen, from the cash flow statement, we just have the capex and dividends paid. And from the balance sheet, we have cash, accounts receivables, inventories, fixed assets, payables, debt, and book equity. So in this model, you just have the accounts that are 100% necessary for valuation purposes, but you do not have a full balance sheet or a full cash flow statement, and the information does not flow from one statement to the other because, of course, they are not 100% complete. This model allows you to perform precise valuations. We have been actually using this model for the last 7 years, but you will require to do your modeling and full balancing of your balance sheet outside of the platform and then importing your data. Advanced Plan onwards is actually where the modeling tool ValuPlan Plus has been implemented. These 3 models are integrated 3-statement models that will have the full income statement, a full cash flow statement, and a full balance sheet. They will all be integrated and sharing information amongst each other. Just to show you, at advanced plan, we'll have the same income statement that we just saw, a full cash flow statement calculated basically in automatic based on the income statement and balance sheet items. The only manual changes that we will be allowed to make here is going to be in CapEx, equity raising or buyback, and dividends paid. And then you have a full balance sheet that, of course, totalizes assets, liabilities, and equity. And at the end, it will also show you a balance check that will ensure that the accounting equation is actually working. Yeah. Even though we have some general accounts here, like other current assets or other non-current assets, I mentioned a full balance sheet because with ValuPlan Plus, for these others accounts, you have the ability to add subordinate accounts or child items, meaning that you can actually add more line items to the balance sheet, so it's a little bit more complete and precise. Now, cost by function and cost by type are also integrated three-statement models, but they are a little bit more complex and in-depth than advanced plan. The main difference between the two of them is how they structure the balance sheet and how they structure the income statement. Cost by function has a very, very complex balance sheet, and cost by type has the most complex income statement of the 5 models that we offer. Okay? The main upgrade from advanced plan to cost by function and cost by type is the addition of 4 supporting schedules: a schedule to calculate fixed assets, another one for equity, debt, and a revolving credit facility in case we have cash requirements. Okay, just to take a look, we're going to review cost by function. You can see off the bat that the income statement is much longer, much more precise, and it has more accounts. You also will have the ability to add any extra account in the other accounts. You now have a longer cash flow statement, given that we have a longer and more complete balance sheet. In this case, you will not be allowed to make any change within the cash flow statement. Everything will be calculated automatically from somewhere else in the model. Then we're going to find the full balance sheet that now totalizes current assets, non-current assets, the same for liabilities, and as well has the balance check at the bottom. And then you're going to see the addition of the 4 schedules. A fixed asset schedule, where we're going to calculate our CapEx, D&A, and closing balance of fixed assets for each period. Our equity schedule, our debt schedule, where we can play with the short and long-term debts. We can play with the maturity of the debt. We can pass long-term debt to short-term debt as well. And again, a cash and revolving credit facility schedule that allows us to set a minimum cash balance for all the forecasting years. And of course, we will be pulling from the revolver if we do not achieve that amount of minimum cash before using the revolver. I see that we have a couple of questions already. Before we continue, I'm going to go ahead and review. I'm going to see if I can actually respond them now. Trevor, yes, in basic plan and in all the plans, you can actually forecast using benchmarking services. I'm going to cover that just in a second, so I will not go a little bit more in detail. And Patricia, I will respond to your question later on. This one's a little bit more complex and it will take a little bit more time. So please bear with me for a minute. On the next step of the process, we're going to just go and select the advanced plan for this example. And you can just start your evaluation and your modeling with the last year's sales only. So you can just have that, or you can upload your model via Excel. With the upload via Excel, you do not need to change anything in your Excel file. You don't need to alter your forecast or your formats. You just need to download this template. That is an export tab. It's an additional tab you need to add to your model and just link the cells, for example, for sales, for costs, and basically do that linking, and you can just upload the Excel file. You can upload partial forecasts as well, or just historical data, so the platform can help you with the modeling. The idea here is that you have a forecasting and modeling tool integrated. In this case, I'm just going to go with last year's sales only, and at the end, you just have to give a name to your scenario. In this case, it's called Advanced Plan 1, because I already have one scenario created. Here, you should go and hit Create Scenario. In this case, I'm just going to cancel to show you what I already have. So off the bat, you will already see the income statement here. There's a couple of colors going on here in the model. Just to give you a little bit of heads up, all the colors here have a meaning. But you can review the meaning of those colors in the little eye at the top. If you hover over this eye, you can see that the black cells, or in the case you're using the light mode, the white cells are going to be calculated values. Green cells are going to be preset values like last year's sales or coming from benchmarking. Blue cells are going to be manual inputs, and red cells are going to be errors or mistakes that have been that are happening in the model. Okay. As you can see, I already have the green number 300, in this case, million in 2023 for sales. This is an input that I did at the beginning of my valuation process. And if I expand the net sales line, I can actually see that all the forecasted years are green colored. This means that my net sales growth rate is actually coming from benchmarking. I can also check that this is coming from benchmarking data right next to the net sales name. I have this little square that says benchmarking data. And I can also see that I'm using a median for my benchmarking data. I could also use a 25th percentile, and I can also use a 75th percentile. Okay? In this case, you may be wondering where this information or where this benchmark is coming from. You can actually take a look at that at the benchmarking tab at the top left corner. If I go to benchmarking, you're going to see that we're going to have 4 options to benchmark here. Okay? First is going to be public comps. Basically, there's going to be a list of 15 possible public comparables that the platform will put together at the beginning for you. But then, of course, you can edit this list, change it, and bring some comparables that are more related to your actual operations. In this case, it's going to be public comparables, public companies. And you're going to see, for example, this net sales growth table, and you can actually see the expected net sales growth of each of the companies that you're actually working. At the bottom of the table, you're going to see the lowercase or the 25th percentile that we were working with before, the median and the 75th percentile, and of course, the applied metrics in case you have manual inputs here. The data of the public comps and the forecasting growths or margins of operating expenses, margins of EBITDA, margins of EBIT, everything comes from Capital IQ Analyst Consensus. The platform, as you may know, it's directly related or linked to Capital IQ data, and this is pulled directly into the platform. We have also 3 other options to forecast. In this case, they are not available because, of course, of our firewalls that we can actually protect the data of our users. And basically, there's going to be industry benchmarks. For example, in this case, in the industry of retail sale of hardware, paints, and glass in specialized stores. I made a couple of edits. That's why it's showing 0 companies, because I wanted to showcase you the firewalls that we actually use. In order for us to be able to use any of these industry benchmarks, we will have to have at least 15 companies in the industry, so we can actually go ahead and use the benchmark. Why? Because even though the main data source for these benchmarks as well is the Capital IQ, we also use private information from other companies that has been valued using our platform. Okay? Now, how would we ensure that that information is not shared and it remains private to you? First, of course, we require 15 companies, so you cannot reverse engineer this, and you cannot discover which companies are actually within that industry. And then, of course, when you're using any of these benchmarks, you will not see the line-by-line company growths. You will just see this last part of the table, the percentiles, the median, and the applied. Okay? Going back to the financial projections, I can also show you that we do not only have the ability to do benchmarking forecast. Okay? Trevor, yes, the growth rate from Capital IQ come from analyst forecast and the analyst consensus forecast. Okay. Now, we do not only have the benchmarking data, we can also have a couple of options to forecast. First off, keep the percentage constant. This is pretty straightforward. It will take the first benchmarking data, 5.4%, and it will keep it constant throughout the years until the terminal year that we always set as 2% to match the inflation or global inflation rate in the long run. Okay. We can also use an interpolate feature that will bring this 5.4 to this 2%, reducing the growth on equal matters year by year. So when I interpolate the data here, the platform will take any data point that is a benchmark or manual input, and it will reduce or increase the growth rates or margin rates on year by year basis on equal manners. So for example, if I set the growth rate for 2027 to be 9%, the platform will take also this manual input into consideration. So my sales growth is going to be growing or it's going to be increasing on year by year basis from 2024 to 2027. And then it's going to be reduced from 27 to the terminal year. Okay? These options are applicable to all of the accounts that actually have the little square on the right-hand side of the name. In this case, I'm just going to delete this and I'm going to keep working with benchmarking data. And just as I mentioned before, for all the other accounts, the other operating expenses account, for example, you can see a plus on the right-hand side where you can actually expand and detail which accounts are actually considered here. So for example, you can add cost of goods sold, or you can add any other expense that you want to include between net sales and EBITDA. Remember that you can check all the formulas that we use to calculate each account in these little blue eyes. So if you hover over them, you're going to see the actual calculations. So you know what to edit to change some results, like EBITDA, for example. If I keep going down, you're going to see now the cash flow statement. As mentioned before, all or most of the accounts are calculated from the income statement and the balance sheet. You can see your changes in net working capital here, net income and D&A. As mentioned before, you're going to be able to edit or change the capital expenditures, the equity rising or buyback, and the dividends paid. All the other accounts are automatically calculated from the balance sheet or income statement. At the bottom, you see the closing balance of cash that is then going to be pulled directly into the balance sheet. Okay? In this case, the balance sheet is showing me an error. You can see already at the top. Here you can see the error, and you see other non-current liability from 23 to 2031. Okay? As you can see here, we have these mistakes. Again, this is not, let's say, an error itself, but we use the other non-current liabilities account so we can actually close the balance sheet and the balance always balance. Of course, this is not hard-coded. If you do not want to use this automatic balancing, you can just go ahead and zero this out. And then basically you're going to see that it's not balanced. Okay? In this case, this may be due because I have added a lot of book equity. So if I reduce the book equity here, you're going to see that this number will become positive. And if I just change this to be the book equity, these other non-current liabilities should zero out, and we still will be balancing our balance sheet. Okay? As mentioned before, all the other accounts will have the plus on the right-hand side, so you can just keep going and add any new line item that you want, and basically have a more complete balance sheet. Now, we already checked the benchmarking tab. We already know what this does, but you can also see that there are a lot of tabs on the right-hand side. First off, we have the enterprise value equity value bridge. This is a pretty straightforward tab. Basically, here we will do a net debt calculation to get from enterprise value to equity value at the end of our valuation process. The platform will always take the last historical year debt and cash as starting positions. But of course, you can either override these numbers or you can add more accounts like pensions, non-controlling interest, minimum cash, and you can also add custom positions. If you have any non-operating assets that you can liquidate or any other cash or debt equivalent, you can add those positions here to alter your net debt. And of course, at the end, you will see these results. The next step here is going to be the valuation relevant cash flows. Basically, this is self-explanatory. You're going to see how we calculate and forecast the cash flow on year-by-year basis, how we arrive to our net operating profit after tax, to our free cash flows, total cash flows, a flow to equity, net income, and again, you're going to see the metrics that we have used to get to those numbers. Again, you have the little eyes on the right-hand side of the name of the accounts, so you can actually see how this is going to be calculated. One of the main benefits of ValuPlan Plus, of course, is going to be more precise cash flow calculations. As we have more accounts in the balance sheet and we have more accounts in the whole model, you will have a more precise cash flow calculation. Right next to it, we have the net asset value tab, and this is also pretty self-explanatory. This is the adjusted net asset value methodology. It's pretty straightforward, and here's also an added value of ValuPlan Plus. As you have more accounts, you can have more detailed net asset value per market value adjustments. Basically, here the platform will take all your asset closing balance of the last historical year, and you will be able to make fair market value adjustments here at the middle. So, for example, let's say we have some terrains or some fixed assets value that's 175 million or thousand, in this case, soles. You can use USD or any other currency that you want to use. And let's say these assets were revalued and they are now 200,000 or 200 million, whatever currency you're. So I can just make that adjustment 25 million. The platform will calculate the recovery ratio of the asset, and you will have the adjusted book value of the asset. The same will happen for your liabilities. You will have all your liabilities, and then of course you can make fair market value adjustments, not only the adjustment itself, but also the recovery ratio. Let's say we renegotiate debt, and then our debt becomes 90% of what it used to. I can just change the recovery ratio. The platform will calculate the adjustment, and you will see the adjusted book value of the debt. At the end, the platform will take all the adjusted assets, subtract all the adjusted liabilities, and you will get the adjusted net asset value of the company, or the liquidation value of it. The last three tabs are basically metrics and KPIs. You have your validation tab, where you're going to actually see your growths on year-by-year basis for all the accounts, for sales, EBITDA, EBIT, and net income, your margins on all the forecasted years. You have an investment analysis performed automatically based on your model, a DuPont analysis also performed automatically based on your model, and then you have a return on capital employed analysis performed as well. The credit ratios tab will also have some metrics and KPI, but they are a little bit more oriented to the financial overall health of the company. You will see your asset turnover, total debt, your capitalization rate, tangible net worth of the company, trade working capital, and cash conversion cycle as well. Okay? All of what I'm sharing with you right now, it's also imprinted on our reports at the end, so you can actually present all of this information to your users, to your clients, and you can actually showcase where their strengths and options of improvement are actually located. Last but not least, we have a rating analysis tab, and this basically allows us to perform an analysis on our debt in all the forecasted years. Basically, what we are going to be calculating is our interest coverage ratio for all of the forecasted years. Based on that ratio, and on the bottom table, this is a table that comes from Moody's actually, we will actually give a rating to our company debt for all the forecasted years. And you can, of course, see what that effect of that rating is going to be on the debt or the cost of debt. So, for example, we have a rating of AAA in 2028. In this case, 2028 is going to be our year number 5. So a rate of AAA on year 5 will mean a spread of 0.35% of the cost of debt. This will mean that the cost of debt should be increased by 0.35 for this forecast. Okay. I show you a lot of things right now. I know this is a lot of information to take in such a short amount of time, but there's still a couple of things that I want to cover before we go full with the Q&A. First things that I want to mention is that you may see that there's a lot of clutter here. There's a lot of options. There's a lot of information. You have the benchmarking or forecasting tools. You have the case that you can select. You have the tooltips. You have the little trend lines here. You have all the tabs at the top. Just remember that everything in Valutico is editable and it should suit your needs. Okay? So you can configure ValuPlan Plus to show or hide any of the things that I just mentioned. At the top right corner, you have a more button right here. And if you go to ValuPlan settings, you can actually go ahead and turn on or off everything that I mentioned, all the drop downs, all the buttons, all the features and tabs. So you can just have the name of the account and basically the numbers. I'm just going to do that and show you how that looks. And then we can continue with the presentation real quick. So if I update right here, you're going to see that this is going to change. And the only thing that I'm going to be seeing right now is going to be the name of the account, the financial projections tab, and the numbers themselves. So if you want to manually go ahead and model or make changes or just review by yourself, you can do it here. And then, of course, you can set this up and turn on and off whatever works for you. Okay? Now, what I'm going to be turning on right now that was not turned on before is a new feature that we just released a couple of days ago in our October release, and it's going to be the tax schedule right here. The tax schedule is exclusive for ValuPlan Plus users. It will be available from Advanced Plan onwards. And basically, the tax schedule will allow you to do tax losses carryovers. In case you have a loss in a certain year, basically the tax benefit is going to be pulled automatically to the following year. So you can actually go ahead and reduce your effective tax rate. For this example, I'm going to go ahead and change my interest expense for any of the years, let's say for 2024, so I can actually have a loss in EBT. So I'm going to put a minus 58 interest expense. As you can see, I'm using the keep constant feature. So this 2% is going to be setting that up for all the other forecasted years. And as you can see here, we have some losses on the EBT. If I go all the way down, I'm going to go ahead and pass the balance sheet. And then I'm going to get to the tax schedule. Basically, the tax schedule will be set in a couple of parts. This is going to be just a calculation of your supposed or effective corporate tax rate based on the selected country tax rate. And then, of course, when you have losses and you have a positive tax, this will be added to your closing balance of the schedule. So you will have a benefit tax or a positive tax that you can apply to later periods. On year 2025, as we do have taxes to pay, we're going to use those benefits that we gain on the last period. This is going to reduce our tax to be paid from 14 to 11.8 and our effective tax rate to 23.7% instead of 29.5%. If you already have benefits that are coming from prior periods, different jurisdictions treat the tax carryover for losses different. Maybe you can just carry over certain amount of your taxes. Maybe you can carry over your taxes for a certain amount of years. As setting those things up specifically for each jurisdiction will require a lot of effort, and it will make a very complex tool. We have added a tax adjustments line. So if you want to go ahead and reduce your tax, your closing balance of taxes, or you want to just offset these numbers or change the taxes to be paid on per year basis, you can just make those changes. Just to continue with the example, I'm going to add some losses here as well, so you can see a little bit of the movement of the schedule. So on 2026, I'm also setting some losses here. Let's make this number a little bigger. Okay. And then if I go back to the schedule, you're going to see that I have 0 taxes to be paid in all the forecasted years. I think I went a little bit too far with the losses there. So let me just reduce the number a bit. Let's go back to minus 75. And then you're going to go ahead and, my bad. This is the percentage changing. Let's just keep this at 2%. We do not have losses in all the periods. Perfect. And then you can actually see that we are going to be using all the losses in all the forecasted years. The effective tax rate is recalculated for all the periods: 0%, 23.7, 0, 26, and then 29.5. And this is pulled, of course, automatically into the income statement here. You can actually see the tax rate calculated here. And of course, your cash flows will also be using that tax rate from the tax schedule there. So I think that covers basically all the capabilities of ValuPlan Plus. There's a couple of other exciting features that we're working on to be implemented here. So I'm going to stop sharing my screen right now real quickly, and I'm going to allow you a couple of minutes for you to enter your questions. If I'm required to share my screen again, I of course will do it to show you whatever you actually asked for. Just give me a second to open the Q&A, and again, I'm going to give you a couple of seconds to enter your questions. So Vasileios, yes, for ValuPlan Plus, in all the other accounts, for example, in other current assets, other non-current assets, the same with liabilities, you can go ahead and add other line items. Regarding your questions for income in the P&L, at the moment, it's not a capability. It has been asked by our users before, so we're working into implementing it later on our roadmap. Just as an FYI, we work with Agile methodology, so every recommendation that our users give to us, we translate to the product team, and they consider all of those recommendations in our backlog, so we can actually go ahead and implement it in later days. For basic plan, you will have the ability to enter the tax rate manually. So year by year basis, you will be able to change the tax rate and of course do these calculations manually. But again, the tax schedule is just exclusive for ValuPlan Plus. No, David, you are going to have the ability to upload your financials or the client's forecast or numbers in any format that they have or any format they use in Excel. Okay. The only thing that you require is to add one tab called Export. Okay? If you give me just 1 second to open an example, I can share my screen again and show you how this looks. But again, you can work in any format of Excel that you want. Just 1 second to review all the other questions. Okay, Patricia, your question, there is a plan that has those accounts, cost by function, cost by type. Those plans have the cost of goods sold. You can see your gross profit. You will be able to add your SG&A, personal expenses. That would be available in cost by function or cost by type. In advanced plan, we have the other operating expenses, and that line item will account for all the expenses between net sales and EBITDA. On that account, you can also add the child items that I was mentioning. So you can go ahead and explain which accounts belong here. For example, as you mentioned, cost of goods sold, SG&A, etc., etc. That's a very, very interesting question. As I mentioned before, we get our forecast and our expected growth rates and margin rates in the future years from Capital IQ directly. So what Capital IQ does, it does a consensus between their analysts, what they expect the growths to be, and we pull the information directly from Capital IQ. We do not do the forecasting, or we do not do the let's call them growth expectations. This data comes directly from Capital IQ. David, I'm going to share my screen in a minute to show you how to import your data from any kind of Excel file. Just give me 1 second. No, net sales does not represent gross profit. Net sales would be just gross sales minus any discount losses or any sale losses that you can apply. So basically the net sales that you will be getting into the company. Yes, I'm getting this question a lot, so just give me a second to reshare my screen and I will show you how to import the data into Valutico. I'm going to be showing you an example model that I have in Excel. Again, you can use any model in any format that you have it. Okay, this is just going to be one example that I have. As you can see, I have my income statement right here. I have a balance sheet, my cash flow statement, some supporting schedules for data and PP&E. I have different sheets with different information, and I have a tab called Export with a capital E. Okay? This is the tab that I actually need to add to my model so Valutico can recognize my data. Again, this can be in any format that you want. It can be the income statement in one tab, the balance sheet in another. There's no problem with that. The only important thing is that you have this export tab. Okay, so for example, for net sales, I'm going to delete numbers. And the only thing that I'm required to do here is link the numbers to the corresponding cell. So I have my net sales for 2023. I'm just going to put equal, and I'm going to go ahead and find my revenue for 23. And that's basically it. As in my model, I have all the numbers next to each other. I can just go ahead and just copy and then paste, and I will have all my numbers. For other operating expenses, okay, I have added these 3 different line items. I'm going to delete them now. I'm going to show you how to add them later on. But basically, let's say I have my other operating expenses line here. I can just go equal, go to my projections, and I can go ahead, 1 second, equal minus, because my numbers are in positive. I can just go ahead and select all the expenses between net sales and EBITDA, my SG&A, and I'm of course going to be adding back my depreciation and amortization rate. Basically, I have all my other operating expenses. I can again copy paste. That's basically going to be it. But as you saw before, I can add my independent line items or my subordinate or child items to the other accounts. So if I want to go ahead and then I'm going to insert a couple of lines, and I want to go ahead and add cost of goods sold and SG&A. Let's say I want to also add personal expenses. The only thing I would require for the platform to actually recognize these line items would be, of course, not having any in the other operating expenses line. And I will just need to copy the key on the right-hand side and just add a column with an enumeration. 1, 2, and 3. And then I can just go ahead and link directly data to cost of goods sold, SG&A, and basically all of those things. So I can go to cost of goods sold. I can go to SG&A. And then basically, I just have those 2 expenses. I can just copy and paste them across. And basically, that's going to be it. Let's see any other question. Hello, Remigio. So at the moment, we use 2 industry classifications. That's actually a pretty good question. We use GICS, that is the Capital IQ Industry Classification, and NACE, that is the European Standard Classification. We're also working, and we have received a request for NICE classification. That's on a roadmap, but I cannot give you an expected time for release. The explanation for that 2% growth at the terminal year would be that 2% is going to be the long-term inflation rate worldwide. So that's what we use. But again, remember, everything is editable. So if you want to use the long-term inflation rate for your country, you can just make that change. For example, I'm located in Lima, Peru. Here, the expected long-term inflation rate is 3%. I could easily make that change. So that's reflected in the platform. I'm going to wait a couple more seconds to see if there are any other questions here. That's a good question, Trevor. The key line is actually what the platform used to recognize the accounts. Okay, so that's actually a non-editable line item. If you delete that key line, the platform will not recognize the data into Valutico. As you just saw, you can just add those line items. You can expand that time frame. You can add up to 5 historical years and up to 10 forecasted years. The minimum required would be 1 historical year and 3 forecasted years. You can make those changes as well in the Excel file as long as you do not delete the key line. If you delete the key line, that's actually going to make the platform not recognize your data. In this case, the benchmarking, if you add your manual forecast, the benchmarking will just show you the other operating expenses major account forecast. Okay. So for deferred taxes, yes, you would need to forecast your deferred taxes on. In this case, with deferred taxes, you need to account for them in your balance sheet manually. Okay? Just Trevor, we are actually working on an API right now. If you require more information, I invite you to reach out to your dedicated CSM. And of course, you can set up a meeting with them and our product team so you can actually know a little bit more of our API that is upcoming. Cameron, that's actually a good question. every outflow of money would be a negative, every inflow of money would be a positive in all of the statements. So CapEx should be input as a negative. So this can actually works in the model. That's actually a good question, David. Let me just go ahead and share my screen again real quickly. So for using multiple scenarios, you just have to go to the top right corner. You're going to see that I have the advanced plan scenario right here. If I just click here, I can see that I also have a basic plan scenario, and I can just go ahead and keep adding scenarios here. How do I do that? If I go to the More button at the top right corner, I can create a new scenario. I can basically start from scratch or duplicate any existing scenario. Again, here I can select either of the plans. If I want to go with advanced, basic, P&L, cost by function, cost by type, I'm going to go with a cost by function plan real quickly to show you how this looks. Again, this is not fully modeled, so it may have some errors. Basically, here you can select to start just with last year's sales or upload your data via Excel as we did before. And then we can just name the scenario. When I create the scenario, you're going to see the new cost by function scenario. Patricio, to answer to your question from before, you can actually see cost of goods sold right here, distribution expenses, admin expenses, other operating income and expenses. We also add extraordinary income and expense line items. Then you have the full cash flow statement. In this case, as I mentioned before, is non-editable. Then I have a full balance sheet, again, more detail with 12 current assets and non-current assets. The same for liabilities, my balance sheet, and then I have my schedules, my fixed asset schedule, my equity schedule, my debt schedule right here to short and long-term debt, and my revolver credit facility schedule. And of course, the tax schedule that we already saw in advanced plan. In this case, if you have other accounts in like other investment accounts, basically you can add them depending on the nature of those investments. If they are short or long term, you can add them either under the other non-current assets. For example, we have other long-term investments. And then when I add this, you're going to see that this line item is going to be added to the actual balance sheet, other long-term investments. And of course, you can just go ahead and input the numbers that belong to this account. So Remigio, in the case of a startup with not sales yet, again, we have the venture capital methodology that will allow you to perform evaluation based on expected future cash flows and exits. So in this case, I would recommend that. That's a good question, Trevor. The purpose of having this is that you have a tool that is dedicated solely to modeling and valuation. Excel, even though it's a very good and useful tool, it has a lot of capabilities. It may induce to human error. It may induce you to commit errors on the formulas, and it may result on misleading results. Okay, so the idea with ValuPlan Plus and having a modeling tool that is optimized and basically created for modeling and forecasting is that you can minimize that human error and have more precise forecasting and numbers. David, very good question. If you just want to make a variation of any of the scenarios, let's say of the advanced plan, I can just go to More, New Scenario, duplicate an existing one. I'm going to duplicate advanced plan, and I'm going to just call this scenario duplicate. Okay. I'm going to go ahead and hit Create Scenario, and then you're going to see that we're going to have a duplicate scenario or name at the top right corner. There you go. And then, of course, we're going to have the same scenario, the same numbers that we did before. And then, of course, you can make some changes. Yep. If you can, I've mentioned, you can build your model outside of Valutico and then bring it in. You can partially have the model and then bring it into Valutico. And then, of course, you can create a whole modeling from the platform. Remember that every cell that is actually highlighted or actually rounded, you can edit. So you can, for example, change your operating expenses as a percentage of net sales, or you can actually change the number of operating expenses. The idea is that you have all the flexibility that you have or want here. So I'm going to stop sharing and wait a couple more seconds for a couple more questions. We have 5 more minutes, so let's go ahead and wait for a bit. Can users pre-quote? Yes. As mentioned before, within the same valuation, you can have multiple scenarios with different plans. So you can start with as basic as a P&L plan if your user just shared the income statement with you at the first point in time. And then you later on can create more and more scenarios that become more and more advanced with the information that you get. Hey, Patricio, let me check for your last question. At the moment in the income statement, you should actually just add the current tax, and then the first tax should be added to the balance sheet manually. Okay. Reem, that's actually a very good question. Is it possible to download the model in an Excel format? Yes. Okay, you can actually download ValuPlan Plus and the whole model in an Excel format. Let me show you how to do that. Again, top right corner, you have the More button right here, and you can just go ahead and download as an Excel file. Okay, I'm going to download this document. I'm going to stop sharing and share again on that mod. While that loads, Raul, the currency selected at the beginning of the evaluation process. So when you start evaluation, it will be asked for the currency, and that's where you set it up. Now, this is the document that I just downloaded. Okay. As you can see, the first thing that you're going to see is going to be the export tab. So if you want to re-upload this, basically you can go ahead and do that. But then you have multiple tabs here on the right-hand side. The last one would be the best practices tab that will explain you how to use the export tab, so how to upload your data. But then you have your financial projections. So if in this case, I could delete the key because this is not going to the platform. And basically here you already have your model. You have your income statement, your cash flow statement, your balance sheet, and your tax schedule as well. Then you have your valuation relevant cash flows, also downloaded directly from the platform. Again, in these tabs, it does not matter if we delete all of these things. The only place that this matters is going to be on the export tab. Please do not delete the key on the export tab. Then you also have your validation tab with the numbers and metrics that I mentioned before, your credit ratios tab as well, so you can also review these metrics. That's a good question, Trevor. In this case, no. When you download the Excel file, we will download everything as a value. We will not download the formulas. The formulas are within the platform on the tooltips next to the name of each of the accounts. I have a question regarding the most demanded and used valuation method for private business. I cannot give you a precise response on that. That will depend on the reality of the company, the operations, the type of company, the maturity of the company, and this would be treated as a per case basis. What I can mention is that we have a lot of valuation methods in the platform, well, like DCF, adjusted present value, flow to equity, dividend discount model, LBO, multiple valuations, and venture capital, as I mentioned before. That's a good question. Patricia, the AI right now implemented mostly on our peer selection, transaction selection, and qualitative assessment. However, we do have AI also integrated in ValuPlan Plus. Okay, basically to help you to upload your data and how to actually show you how to actually upload and complete your model. Okay? So on ValuPlan Plus, at the right-hand side, you have this little Copilot icon. This is not Microsoft Copilot. This is our own Copilot. And basically, if I start a Copilot, the platform will show me how to fill and how to input the data manually into the platform. It will do this for all the accounts in the last historical year and first forecasted year. And then, of course, basically, you can go ahead and select that if you want to enter the data manually, fill the data with benchmarking data, and you can just continue doing this for all of the forecasted years or all of the accounts in the year 2023 and 2024. A quick recap on where you can find AI on the platform as well. Within the qualitative assessment, you have the Copilot feature right here. For those of you that are not fully aware of what a qualitative assessment is, this is objective analysis of risk that will allow us to calculate the company's specific risk premium for the WACC calculation and a discount of liquidity that we will be adding to our public comparable multiples. When we use AI to get these answers, for example, the company size, the platform will run the name of the company that we input at the beginning with this little question that you find in the eyes, and will give you a value. This value can be then explained in the rationale button, and basically the platform will explain what it has done. Of course, you can edit and override this if you consider this is doable. At the moment, we just use the Gordon growth model for our DCF. We've been asked for the exit multiple method. Again, this is also in our backlog, but we already have something committed for December and February. So this may be something that we work for our April. No, Remy, here you do not need a Copilot subscription to use the Copilot feature here. Again, this is a different Copilot, it's not Microsoft's Copilot, so it's a proprietary AI that we have created and implemented in the lab. Okay. I think that covers pretty much everything. Thank you very much for your questions to everyone that has attended. Remember, if you require the recording, you can reach out to your dedicated CSM, or you can ask the customer success team email for this recording. If you have any other questions or additional questions, please reach out to your dedicated CSM to set up a quick meeting, a quick call, so you can further discuss. For all of those that work closer with me, thank you for joining and for attending. Again, if you require extra information or the recording of the meeting, you can let me know. I can share it with you later. For all the rest of people that has attended, thank you very much for your attention and for being here in this webinar and masterclass. I hope to see you again soon. And that's going to be everything with me for today. Bye-bye.